The U.S. economy continues to baffle the brightest minds in the country, and determining its short-term direction continues to be difficult. Hello, and thanks for checking out this week's Fastest 4 Minutes in Finance. I'm Scott Inman. Well, the big economic data released this week was the July jobs report. It showed non-farm payrolls grew by 187,000 last month, which is about the same as June. The unemployment rate was also marginally the same, dropping from 3.6% to 3.5%. Now, the takeaway is that the labor market is softening, but is still strong. And if you're watching the Fastest 4 video version, take a look at this chart from LPL Financial. This shows job growth over the past 12 months. And with the exception of a spike in January of this year, it has been clearly trending down. And while companies adding fewer jobs may seem like bad economic news, it actually should be perceived as good news. A slowdown in job growth is one of the intended consequences of the Federal Reserve raising interest rates. Yes, the main battle the Fed has been against inflation, and that battle seems to be close to over. The Fed's short-term interest rate is now higher than inflation. But the Fed is also looking to see unemployment rise. Remember, the intent is to slow down the economy without tipping it into recession. But just this week, Federal Reserve members sent mixed messages about their next move. Philadelphia Fed President Patrick Harker indicated in a speech on Tuesday that rate hikes are over. Just one day before that, though, Fed Governor Michelle Bowman indicated that more rate hikes will be needed. At the same time, the consensus among economists on whether we have a recession in the next 12 months is not much of a consensus. The chances have gone from about 25% in March of last year to a peak of 61% in September of 2022. Now, obviously, that's not likely to come true, as we are a month away from that 12-month prediction. So the likelihood of a recession in the next year has now dropped to 54%. As for the markets, investors are all over the place too. The S&P 500 was down 19.6% in 2022. It's up 17% in 2023. The Dow Jones was down 8% in 2022, and it's up 6% so far this year. And the NASDAQ dropped 33.4% in 2022. It's up 32% so far in 2023. So all of this can drive you crazy if you don't keep a long-term perspective and if you don't have a plan. At GenWealth, we want you to see the short term through the lens of the long term. And that's one reason we're bringing in Dr. Jeffrey Roach, the Chief Economist for LPL Financial, for a free event on August 22nd. Now, he will take your questions, and we will even be recording the Get Ready for the Future show at that event. Again, the date is August 22nd, 6:30 at the Chenal Event Center. Now, seating is limited, so we need you to reserve your spot by going to getreadyforthefuture.com/events and register. Bring your questions, and we will see you there. Thanks for watching.